Hello, in this video I'm going to go through tasks 1 and 2 of the second AAT sample assessment for the level 4 DAIF. So this is one that does the cash flow statement. So task 1 and 2 combined will either be full accounts preparation with a statement of changes in equity or a cash flow with the statement of changes in equity. And to be honest, the cash flow is probably going to be most people's preference by the time you've practiced these and sort of really got to grips. So Part A, draft a reconciliation of profit before tax to net cash from operating activities. Show any negative figures using minus signs. Right, and I'm expecting a drop-down menu here. So you can either just go on the arrow, but that's sometimes a bit dodgy, or just double click and it gives you the drop-down. So we start, of course, with profit before tax. Where's the information that I've been given? I think I need to can be viewed in the references section to the right. So I've got to have this open like this on this task. Right, so I've got my profit before tax, which is 8793. Then adjustments for, so I always think of these in sections. So I always start with the ones to do with non-current assets. So that's going to be depreciation, which of course I have to add back. I'm adding it back because it was subtracted as a non-cash expense in my statement of profit or loss. But of course you don't physically pay for it. So the figure here, depreciation charge 6572. Watch out for your zeros, because of course this is already in thousands. So depreciation, and the other one to do with non-current assets is either a loss or a gain on disposal. And they usually give me that in the statement of profit or loss. There it is, loss on disposal of property, plant and equipment. So it's a loss. So again, I'm going to add that back. Loss on disposal. There we go. Right, then I think about anything that has to move location. So in that category, I would have any dividends received, if there were any. There's not in this particular question. If there were dividends received, I would be subtracting them from this section and then adding them back into the investment section. But we haven't got that. But what we do have is finance costs. So with finance costs, what we're doing is we're taking the figure from the statement of profit or loss, which is the 1347, adding that back as finance costs, because down below, after we get to cash generated by operations, we then have to subtract the interest paid. I'll talk more about that when I get there. So for now, we're adding back that. Then I've got 3 boxes remaining, which is going to be my movements in my working capital. So that's my inventories, my trade receivables, and my trade payables. Right, so decrease or increase in inventories first of all. So let's find the figure. Where's it gone? There we are. Right, so we do 6248 take away 5379, which is 869. Don't worry about making a noise. So 869 is an increase in inventories. So if I've got an increase in inventories, I must have spent more money on them. So minus 869. I've then got a decrease in receivables. So if my receivables owe me less money, then that means that I must have collected in more money. So I'm going to add that difference, which is 646. And then finally, the trade payables, which has gone down. So if I owe my suppliers less money than before, that means I must have paid out more money, so my money must have gone down by the difference in trade payables. So that is 1442. And let me just put that in there. Right, so then the next one down, these two boxes here, these are for your everything that happens below your operating profit line. So if we go back up to our statement of profit or loss, we've got operating profit here. And then what we've got to do is subtract the actual physical payment for finance costs and the actual physical payment for tax to arrive at the sort of cash-based equivalent of this 7052. Right, so let's do the interest paid first of all. What's your be careful here, because we had finance costs up above, and then here I can get it to work. We want interest paid. Now, 99 cases out of 100, the interest paid is the same as the finance costs, but do watch out in case they mention that there's an accrual of interest, because the difference here is the finance cost is the charge that's gone into the profit and loss account, and the interest paid is the physical interest that has been paid for the year. And this one, they are the same figure. Right, then we've got tax paid. So let me find that one. Oh, there we go. Oh gosh, it's awkward on this laptop screen, but right, so we've got tax paid. Now with your tax paid, you've got to use not only your tax charge that's been provided, but also your tax liabilities figures. So we do a calculation here. We start with what we owed at the start of the year. So we owed 1843. We then know that we've got an additional tax charge. This would have been debit tax charge, credit liability. So we've got further liability of 1741. So I'm adding that on. And then we know that we still owe 1965. So obviously I haven't paid that yet. So let's minus the 1965. So that gives me a tax paid figure of 1619. So let's just put that in here. So minus 1619, and then that calculates for us the net cash from operating activities. We then have to draft a statement of cash flows for Ocean Limited for the year ended December X1. It makes it clear in the instructions that you don't have to use the workings tables, but they will be taken into consideration if you do make errors. So therefore, it's a wise decision to use them. Just going to split this slightly differently. Right, so net cash from operating activities. Don't worry about making a noise in here. So net cash from operating activities is 12,270. Right, and investing activities, that's all to do with buying and selling your non-current assets. If we did have any dividends received in the previous section, we would add them in here. But here we've only got 2 rows, so I'm going to go straight to the workings. So first of all, we've got proceeds on disposal. So proceeds on disposal is the money that we actually got when we sold the asset. So what information have we got about that? Well, we know property, plant, equipment with a carrying amount of 486 was sold during the year. Sometimes they tell you the cost and the accumulated, but here they've just told us the actual figure that we need. And the other thing that we know is that we had a loss of 189. So if we had a loss of 189, we must physically have got less money than they were showing us to be worth in the accounts. Oh gosh, get them in a minute. Loss on disposal. Right, so that 297, which is a positive number in the working, is going in as the money received here, and that will be my proceeds on disposal. The other working is purchases of PPE. So you can do this as a T account, but some people prefer just to do it as here. So I'll stick with this as I can't draw a T account to show you. PPE at the start of the year. So PPE, property, plant and equipment is just our collective term for our non-current assets. So where we are, property, plant and equipment. So at the start of the year, it was 47515. While I'm here, I'm going to subtract the PPE at the end of the year. Which is 72916. And what we're doing here basically is we're saying we know that there's been an increase in property, plant and equipment during the year of 25,401, but we also know that it was depreciated by 6,572, so that must have reduced it. And we also know that 486 worth was sold. There's still a row left. I was just going to tell you if there's the other thing that could be in here, it actually is in here. Land was revalued upwards during the year by 4,000. So we know that that would have accounted for an increase. So that tells me by putting in all that data, I know that I must have spent 28,459 on buying new PPE. So that figure is going to go in as a minus. Notice it was a minus in the working as well, so that's quite handy. Minus 28,459. Yeah, so it was a minus in the working. Where's it gone? Here, and we're putting it in there. Do make sure you take care doing this bit. It's very easy to transpose numbers, you know, write 28549, for example. So just double check or even write down, I don't know, whatever technique works for you, but do be careful at that point. Right, financing activities. So this is all to do with how the business got its money. So it could be selling shares, it could be movements in loan. And then I always remember that linked to shareholders is the payment of dividends. And that's why it's dividends paid that go in this section. And if we did have any, it would have been dividends received up above. I've just noticed I forgot to put in purchase of PPE up there. Right, so dividends paid, they've told me here at the bottom of the further information. So 2,000, I'm talking in thousands because obviously just knocking off those zeros. That's been paid, so it needs a minus sign. Then I look at my statement of financial position. So share capital, yes, there has been some shares issued, and we have to collectively look at the capital and the premium here. So 32,000 plus 6,530 is what I've got now. And then if I subtract the 24,000 and subtract the 2,150, that gives me a difference of 12,380. Now that needs to be a plus number because that is me selling shares. So I've got money flowing in. The final thing to look at is the loan. So my loan number has gone up in my statement of financial position. It's gone up by, just cheating here and looking at the one I prepared earlier, 6,100. So that means I must have got more money in the bank, debit, bank, credit, loan. So that would have been just bank loans is fine there. So it's worked out our subtotals for us for our three sections. So we've got net cash from operating minus the investing figure. So I'm doing this 12,270, take away 28,162, and then add 16,480. So that gives me 588. And that's the amount my cash has increased by during the year. I then look at my statement of financial position. So I can see, oh, I had no money at the start. So that makes me think, oh, maybe there was an overdraft. So if I scroll down, yes, look, minus 172 was my starting position. So if I do 588 minus 172, I get 416. And then I can shoot back up to my current assets. And I can see that I've got my cash flow correct. So I'm feeling happy in the exam. If it doesn't work, carry on doing the right thing with the wrong number. Don't kind of, obviously you can sort of use your knowledge of where you should start and end to try and figure out where you've gone wrong. But my advice would be, if it doesn't work, just carry on down here doing the right thing with the wrong number, because you will get method marks in an AAT exam. So don't give up. If you can't get it to work, just move on. Don't spend ages trying to find a problem, because obviously that's eating into your time on the rest of the exam. Right, so we answer that one, which brings us to task 2, which is 8 marks doing the statement of changes in equity. Right, so this is, I always find these fairly straightforward, but let's just squeeze that slightly so as I can see it easier. So I'll probably do it wrong now, I've said that. So we go down and we find our opening and closing equity section. So cash flow, you're given the 2 sets of data. So this is what you need to start with, and this is what you need to finish with. So share capital, just to copy it in, 24,000, share premium 2,150. Do take care here. It's, you know, sometimes you think, oh, it's easy, and then make silly mistakes. Retained earnings 6,190. Just make sure that number's the same as that number, which it is. Right, now you'll see it's calculating those end figures. So I can't just type these in, but I need to make sure that it agrees to these when I've finished. So now I want my share issue. So my shares have got to go from 24, my share capital has got to go from 24 to 32. So in the share issue box, that's a difference of 8,000. Can check it works. Here I've got to go from 2,150 to 6,530. We obviously sold the shares at a considerable premium. So check that then works. It's in the share capital row. My revaluation, I know, went up by 4,000. Even if they hadn't told me that, let me see. Yeah, look, it was included in here as well. So they were kind telling us that as extra information. We should have been able to spot that from here anyway. So 4,000 going in as the revaluation surplus against my profit, or total profit for the year. And then in my retained earnings, I've got the 7,052, the profit figure there, which of course adds up to the 11,052 that I've got as the total comprehensive income. That just leaves me with dividends, which I should remember is 2,000. Dividends are paid out, so minus 2,000. And then just finally double check that that equity section agrees fully to what's in the statement of financial position, which it does. So I'm going to press the answer button, and then that is the end of the first 2 tasks. 40 marks out of 120. So that's a third of my exam in the bag.